G'day guys, this is going to be a quick trade breakdown on the trade we took today on gold. Quite happy with it so far. I think we do see continuation in this pair tomorrow, and I do want to take the time to make this video to let you guys understand the fractality, because the past few videos I've been talking a lot about the sell side of the curve and the buy side of the curve and vice versa, and what it all is and how that is your supply and demand zones, etc. And at the end of the day, last week was a really tough week. We've had a Thursday reversal weekly profile, and those weeks are really difficult to navigate. But it is what it is, and we simply, at least they do not occur often, you know. But when they do occur, we have to focus on survivability and keep your account safe. Your account equity and balance needs to be protected at all times, and therefore, if we take a look at this week's economic calendar, we've had read for the news events today. Tuesday, Wednesday, and Thursday. So I do think this is going to be a really good trading week, and it's also the second week, of the month, or the second full week of the month after the true month open. So let's get into it quickly. And the main reason for this video is basically just to show you, because I assume you guys have heard so many times when you are looking for educational content, especially on YouTube. You've probably heard the term a lot, internal to external, or market maker models, or you know, the fractality, that markets are fractal, and there's not a lot of people who can convey that term, fractality, and get it across, you know. So it is quite difficult at first when you need to familiarize yourself with these terms and all of these things. So but what fractality basically means is whatever happens on the higher time frames, in theory, should happen on the lower time frames. And when your higher time frames and your lower time frames all align with each other, then you have a high probability trade. So I want to go down into the lower time frames quickly and show this to you guys. So this was the trade we took today during New York session. We took it there after the New York Open and after our read for the news event, which spiked the market lower to take out any early buyers. So basically, I've highlighted so many times in the previous video, sell side of the curve transitioning into the buy side of the curve, you know. What it basically is, it's literally just premium and discount of this leg over here. So that is your swing low, this is your swing high, and then we are looking for premium and discount. So anything below equilibrium is in discount. This is good buying opportunities, and everything above equilibrium, we obviously do not want to buy at a premium. We do not want to pay premium prices for any assets that we trade. We want to always buy at a low price. But at the end of the day, this is basically what it is, premium and discount. And you guys can see this is the sell side of the curve towards buy side of the curve. Okay, so this is the trade we took today. As this is on the 15-minute time frame. If we then go to the hourly, you will see this just with a little bit less noise. Dealing range, premium discount, we came back to discounted prices. So if I go to the 4-hour, you will see that this is our level of fair value. This is the market basically providing fair value or fair valuation to buyers and sellers. This is pretty much equilibrium of this range. It sits a little bit higher, it's about there, but don't worry about that. So what this basically is, it offers fair value to buyers and sellers, and at the end of the day, we do know that this retracement legs is healthy for any institution, as they can reaccumulate inside of these legs, and they are actually buying in the sell side of the curve, and they are distributing all the orders that they have accumulated on the sell side of the curve. They are actually distributing on the buy side of the curve. So they work totally counterintuitive to what any normal retail trader would think. This is good sells. Yes, for us it is, but for those people with that big pockets and big positions, it's essential for them to dollar cost average into any positions that they are building for the foreseeable future. Anyway, so swing low of the dealing range, swing low, swing high, we came back to discount and internal liquidity was swept, and off we go to external. As I said in one of the previous videos, the market only does one of two things. It will either seek liquidity, or it will rebalance an imbalance or an inefficiency. So this is basically an expansion. This is seeking liquidity. The market is rebalancing inefficiencies that was created, and it is offering fair value to buyers and sellers. And then obviously after the imbalances has been filled and the institutions have done order pairing, then obviously the only objective left for them is liquidity again, and that's in the form of arresting liquidity above all of these reaccumulation or accumulation phases. And at the end of the day, that swing higher over there is housing a lot of buy side liquidity. So I hope this makes sense. I hope that you can see this dealing range, internal, external, and then if we go to the higher time frames, we can then actually see from the daily that this is the exact same thing happening over here. We've had our sell side of the curve, reaccumulation phase, order pairing, smart money reversal, and then we are our distribution phases. So this would essentially be original accumulation, this would be reaccumulation, order pairing and smart money reversal down here, short term intermediate low, another short term low. It's fractal, so there's kind of a lot of ways how you can see that. But this is just once again on the higher time frame, like we're on the daily now. We see the sell side of the curve and the buy side of the curve over there, but we do also see it on the daily time frame. And it's important to see that this once again is your dealing range, swing low, swing high. The market is coming to a weekly inefficiency, as we can see here. That's our weekly inefficiency. So at the end of the day, this is the exact same thing as on the lower time frames. We have internal, and then the market should then again deliver external from our dealing range. We seek stops first. The market seeks to rebalance an inefficiency that was created. The market goes stops to inefficiencies and then back to stops. And yeah, I hope you guys found this informative. And yeah, I think after last week's bad price action, this week should be better. And I think actually we should be good. We should see good price action up until probably the 24th. So I think this week and next week are truly going to be good weeks. And then we'll have to see what happens at the end of May. But anyways, I hope you guys found this informative. There's so much information that really goes into this. I want to make it short and sweet so that everybody can understand. I try to keep it simple, you know. But yeah, yeah, I hope you guys found this valuable. We are probably, for this specific gold trade, we can probably target those highs over there. In all honesty, that's absolutely possible. That's what the weekly, the daily, everything is lining up to take out this external highs over here. Everything is lining up for these highs over here, but that's up to you guys. Normally what I would do is I would get a good position, I would scale out of my positions, and obviously due to the market being fractal and it providing those reaccumulation, redistribution phases like this in itself, this candle is reaccumulation and then expansion, reaccumulation, expansion. And then we've had our smart money reversal and reaccumulation, and inside of this there was more reaccumulation. So for me, it's not really that I want to enter here and exit there. It's more about the process of that and understanding that tomorrow we are probably going to have another reaccumulation phase, and the day after another reaccumulation phase, and the day after we will probably TP. Well, either tomorrow, but essentially what you can do is during all of these London sessions, like New York today was a buy, New York tomorrow would probably also be a buy, the day after New York would probably also be a buy, and you would continue to trade this trend, so you could have multiple positions inside of this leg up, because I mean you do have your higher time frame narrative and your lower time frame context, which are all aligning with one another, and therefore if you can identify these phases, you should know where to take profits, and you can basically predict to somewhat accuracy that okay, the market's going to run to here and then create another internal leg because it's expanding now. Obviously it's creating inefficiencies on the lower time frames. As we can see here, the market's creating inefficiencies all over here, but at the end of the day, we can take majority profits off the table and then focus on a new trade tomorrow, because essentially what the market will do is it will seek external liquidity, hit our TP, the market will then come back down, internal, and then go external again, and then after that it will reaccumulate again and then go off to hit more TPs, if you understand what I mean. So you can essentially take all of these trades consecutively or days after another without holding one position to the very top of the move, and that's basically what I'm doing majority of the time. So I would keep a small position open for as my main target, or the main ones like previous day highs and previous week highs. These are the two most important take profit levels that we obviously want to look for is 23.64 and then previous week high ultimately being 23.78. So that's basically the two most important price levels during this buy side of the curve. And what we will do is we will obviously just look for reaccumulation and redistribution phases throughout the sessions. And the high probability pricing sequence will basically give it to us on time during our kill zones. So yeah, anyways, I hope this makes sense. You guys should definitely take profits at 23.64. You should 100% take a partial profit. Even if you close your full position, no worries. We'll get more trades during this exact same trend throughout the week and as it progresses. So thank you for watching, guys. Have a good day or good night.